Good morning, everyone. Good morning. Thanks ever so much for coming to Cardiff Business School this morning for this topic, which is a very exciting one. What is Fintech and why should I care? It's delivered by Steve Chown and also Sina from Lynq, a Fintech SME are going to be talking. So hopefully you're going to demystify Fintech and all of its secrets for us. Just a bit about who I am. My name's Sarah Lethbridge, I'm the Director of Exec Ed. We're actually in this lecture theatre today because we've got an NHS Wales Finance Academy programme in the Exec Ed suite. So you're getting to see some of our facilities that our undergraduate, postgraduate students experience. And just a little flag actually, we've got Professor Arman Ashraghi, where are you? Over there at the back. He'll actually be talking on a short course to this topic sometime early next year. So look out for more information on us. We're really expanding our exec ed portfolio to provide cutting edge topics of relevance to business. So just a little heads up about some of the activities and events that we've got coming up. The 3rd of October event, it isn't actually a breakfast briefing. We're really pleased with our relationship with NatWest. It's an astute event run with NatWest, looking at smart manufacturing for SMEs. So if you want to register on that event, where's Adrian? Yeah, grab Adrian, he can tell you more about it, or email us in Exec Ed and we can provide you with the agenda. We're also very pleased on the 18th of October to welcome Mark Drakeford to the school. He'll be talking about taxes for Wales, what it could mean for Wales, but more specifically about the vacant land tax. That's sponsored by another partner of the school, Bruton Knowles. So I think the registration's going to come out for that this afternoon after this event. So look out for that one because I think it will be a hot ticket. 13th of November, Professor Andrew Henley in the school is part of a research group looking at the problem of productivity in the UK. So he's going to be talking with the ONS about all of the work that they're doing to investigate the problem of productivity on the 13th of November. And then on the 11th of December, Brian Webb from our Geography and Planning Department is going to talk about Cardiff and how it's changing so much and what that's going to potentially mean for all of our businesses. So I'm actually really pleased. I've got a forward agenda of actual events. Like, this is amazing that for the next few months we can really see and got visibility of what's happening. So we'd love to see you again at these events, and please do share the information to make sure everyone knows about the fantastic stuff that's going on at Cardiff Business School. Our breakfast briefing is being recorded and live streamed, and we need, just so that the recording works basically, at the end of the session when there are questions and answers, please could you wait for a microphone, otherwise it will be like deathly air on the recording stream. So please do wait for a microphone and we'll do our best to be quick. So without further ado, great pleasure to hand over to Steve. Thank you so much for coming to talk to us today. You spent the last 25 years in banking, but the last 2 have been the most enjoyable and fast-paced. So I think we're going to hear about that now. If you could tell us more about your work at NatWest and demystify Fintech, we'd be very grateful. So thanks ever so much.
So I'll do my best to demystify Fintech in a short space of time. One of the most important things you need to understand about Fintech is it means I work for a bank and I get to wear jeans and trainers. This is sort of Fintech uniform. And the other thing just to mention, Sarah mentioned, make sure your mobile phones are turned off. I have a very special penalty. If anyone's mobile phone goes off, you get to come present the next 2 slides. So just and the other thing to mention is I'm not checking my emails, I've got my notes on my phone. I'm not Twitter or anything like that.
Fintech's fast-paced, you've got to be on it.
So yeah, so a bit about who I am. So my name is Steve Chown. I work for the NatWest Accelerator Programme. We have accelerators across the UK. One of them is in Cardiff, over near the stadium, and across 11 other locations. So London, Bristol, closest, and then over across to Birmingham, Brighton, then up Newcastle, Leeds, and Manchester. Also Glasgow, Edinburgh, and Belfast. I think that was 12. My particular role is to look after the Fintech programme. So as part of that main accelerator, we have a Fintech programme that runs to look after Fintechs and promote them and help them grow and scale. So that's based out of 4 locations, Bristol being the closest, so we group together the Fintechs in 4 locations. Bristol, London, as you'd expect with Fintech, also Manchester and Edinburgh. We've got 30 fintechs in the programme at the moment. They've been in there since April. We've got another 55 during October. So it's one of the largest fintech programmes in the UK. The other thing about the entrepreneurial programme that we're on at NatWest is it's free of charge. So we don't take any equity, we don't charge people, they don't have to bank with a bank. It's truly just there to help entrepreneurs scale and grow. They get office space, they get coaching and mentoring. On the fintech side, they get a specific programme built to help fintechs grow and scale their business. Across the UK, we're supporting around 900 entrepreneurs at any one time. That's across every sector you can think of, and like I said, particularly with the fintech side, that's part of the programme. We're going to start off with, just to get a bit lively, you need to stand up. We're going to do fintech sit-down bingo. So everyone stand up to start off with. And there is a prize. So this is so you stay standing if you have a PayPal account. So stay standing if you have so if you don't have a PayPal account, sit down. If you stay standing if you do have a PayPal account. So stay standing if you've used contactless payment in the last week. Good. Not getting rid of many people. Stay standing if you have online banking on your phone. Okay, so now sit down if the last time you logged into your online banking you actually put the password in. So you didn't use your thumbprint or your face, you actually had to put a password in. Oh, I get a few. Thought I'd get rid of a few more people. Depends on who your bank is as to whether that's an option or not. Okay. Next thing, this should get through the input. Anyone got sit down if you haven't got a Monzo account? So if you've got a Monzo account, stay standing up. This is getting. I thought I'd be quite generous with the first one. Quite cool. So how many have we got left? 1, 2, 3, 4, 5. Okay, 6. Now, next one. Have you got stay standing if you have a Revolut account? Revolut. No winners. So they are all various elements of fintech. And I just want to show that some of it is very broad, the use of fintech, and some of it is very niche. But as you'll see, that there's quite a distinction between very broad technologies, and a lot of people standing up, suddenly you've got very niche at the end and only a few people standing up. So what is fintech? And this is not my sole slide in the presentation, by the way. I'm going to sit down after this. But this is a very simple definition of fintech. So the application of technology to improve financial products and services. That is what it is. That is demystifying it, essentially. I'm not going to sit down now. Actually, this week, fintech was accepted into the dictionary as a term. It's actually been used since the early 70s. It's only really in the first couple of years, the last few years, that it's come to prominence. But it's now a word in the English dictionary, fintech. Before, it was just an abbreviation of financial technology. There, demystified. So what I want to do is run through a bit about what has led to the recent surge in fintech being a buzzword and rise in fintech in general, and then give you some indications of how fintech's being used nowadays by banks in general and by ourselves. So what has enabled the growth of fintech in the last few years? So one of the main things was the financial crisis. When the financial crisis happened, a lot of the banks refocused. Basically, they refocused on basically staying alive, and so there wasn't much innovation at all. And also, what came out of that was a desire for increased competition, and that particularly came from the regulators. So the FCA, as it is now, was really keen to get more competition in the marketplace. So they're keen to encourage more new businesses to come to the forefront. And one of the things they were able to do is bring in innovative sandbox environments, etc., to encourage fintechs to grow. One of the things that was said about the banks trying to innovate was it's a bit like trying to change the engines on a jetliner at 30,000 feet. When you're running a major bank, it's very difficult to implement new current account products when you've got 3 million customers. For fintechs, when you're starting off with 100 customers, 1,000 customers, you can do that. Not so easy for banks to do that. This slide doesn't look like it did earlier on, but never mind. The other thing that's really enabled the growth of fintech is these guys, Apple. So 2007, the first Apple iPhone came out. Now the whole change in how we operate with mobile phones and certainly smartphones, basically smartphones are now small computers that we occasionally use for a phone call. That's what they are nowadays, in reality. You can, I think sometimes you can go a day without actually using it as a phone, it's just a computer. So the change of us having that technology in our pockets and mass adoption of those has really helped the growth of fintech. And the final thing is consumer behaviour. That's my mobile banking app when I open it up. Good afternoon, Stephen. Only my mobile banking app, my mum called me Stephen, by the way, when I was calling me Steve. But the whole way that we look at now as consumers has changed in terms of the demand for personalisation, immediacy, and also apps that do one individual thing. Again, driven by mobile phones, has all changed. So the growth of Uber, for example, the growth of Airbnb, those us having that ability to actually want that one company to do that one thing has really helped fintech. So I'm going to go through what it isn't, what fintech was, and what it is now. So it's not that. And this is the chance for me to do my really rubbish joke, which I'm going to do. I was told not to do it, but I'm going to do it anyway. I'll go find it now. Okay. How can I make this pound coin into a cryptocurrency?
Using blockchain?
It's now Bitcoin. I said to my wife it was a good joke. She wasn't convinced. That's what I'm going to say on Bitcoin. So it's not about cryptocurrency. There's a lot of confusion around blockchain, distributed ledger technology, and cryptocurrency. Fintech. Cryptocurrency is a fintech, but that's not what we're interested in as a bank. We're interested in blockchain and the use of the blockchain for banking, but we're not interested in cryptocurrency as far as it's unregulated. We're regulated. We can't get involved. Also, it's on a big wave, and you could say on the back end of a wave now in terms of a classic model of a financial bubble. And we're watching that closely, as a lot of institutions are, but it really is on the back of that bubble. So at the moment, banks are looking at Bitcoin, looking at Ethereum, all those sort of things, and monitoring them. But what we are really interested in is the technology behind it, the blockchain technology. So what it used to be. So when you talk about fintech a few years ago, you come up, and I mentioned these brands earlier on. Monzo, nice funky coloured cards, one of the main things. Revolut. Anyone know what the one in the middle is? It's TransferWise. So all of those are fintech businesses, and they are a classic example of what a fintech business started off being, which is basically a single provider of a service. And it's called, what they did is they debundled banking. They debundled it. So they went to providing a sole service really, really well. All the banks, like NatWest, we do everything. We serve children's accounts, we serve student accounts, we serve current accounts, we do businesses, we do corporate banking, we do everything. What fintechs originally started doing, they debundled it and went and said, well, okay, we'll do one thing really, really well. Monzo, really cool app, open it up, take a selfie, video yourself, I want a Monzo account, opens your bank account. That's really cool. You get a nice colour card, it's quite flash. You get free currency transactions when you're overseas, in terms of you don't pay fees on it, etc. Revolut, again, they give you really good transaction rates on your currency, allow you to swap in an app between different currencies, so you can flick between pounds, dollars, euros, and transfer at the market rate, and then pay in that country at the actual cost of that transaction without any fees. So they've basically debundled and specialised in one particular area. TransferWise also currency. What you'll find though is, anyone see Monzo's latest financials? Yeah. Did they make a profit?
No, they didn't.
No, they didn't.
I think
Significant.
it's a 27 million loss.
Because offering current accounts to people with cards and free currency transactions doesn't make any money. So what you find is these fintechs are now rebundling. They're starting to sell more services again. So they're basically specialised and actually get some customers on board by offering a particular thing that they're really good at, and they're now rebundling again and adding in products and services. So Revolut, which is basically a currency card, multi-currency card, if you go on there now, there's options for cryptocurrency, there's options on there for wealth management, there's options on there for insurance. They're adding in those services again because that's actually where you make the money by cross-selling products, which is what banks have always done. Anyway, that's a big change. So originally that's what they were, coming up with these new fancy brands with trendy coloured cards, really modern ways of getting online, etc. That's how they started off. What it is now, so this is how fintech has changed over the last few years. And it's just a number of things really. Zopa, anyone know what Zopa is?
Yeah, it's a peer-to-peer personal lending.
Yeah. So that's one of the main things that's come out of fintech, is the ability for us to use technology to use peer-to-peer lending. So you can get a group of people together and they can fund a business, a personal loan, etc. So Zopa, Funding Circle, those sort of people, they're modern examples of fintech businesses. AI. So AI is a lot of stuff. One of the things I talked to someone earlier about was robo-advisory. So that's the use of computing and machine learning to actually make investment decisions. And the real change there is, as technology has advanced, it's not purely about data analytics. We've always had computers that would basically give stockbrokers some analytics on what a stock had done historically. But what AI and machine learning can do now is also read commentary. So it can look up articles, see news articles, and take that into account as well. That's where the real difference is on that side. It's actually doing a much wider, informed, I guess, the job of a broker, which is actually taking the market education into consideration as well, not just looking at numbers. Computers have done numbers for quite a while and been able to give us reports, but now AI can actually also read stuff, make a decision based on that commentary and take a view on it. I think the other thing as well with AI is that there's the use of social data, and it can actually be quite controversial subject really. So is looking at someone's Facebook profile, is that a good way of making a loan decision? So we were over in Tel Aviv in Israel a couple of months ago speaking to some fintechs over there, and we had a guy who used to work for, I think it was Mossad basically, but anyway, he used to work for the Israeli Secret Service, and his job had been to look at the profile of people and, in his words, see whether they're going to be naughty or not. Now what he had done was said, actually, I can bring that across to finance. I can look at people's social media profiles. I can look at see whether they are an attention seeker. Are they a risk taker? Are they looking to... And he was able to then actually say, well, actually, if these people are a propensity to show off, take risks, there was a propensity for them to also default on loans, for example, or commit fraud, all these sorts of things. Very early stages, he knew how to do that, he just didn't know how to put it into technology yet. But that's the sort of thing where you're going, and we were sort of saying, well, okay, but we're not actually sure morally where that sits. We get it, and I guess it's quite interesting, but in reality, he's saying, well, actually, we could just look at all your staff and see whether they're going to commit fraud or not. So, okay, we sort of get that, but I'm not really sure how that's going to sit with the bank wanting to do that, especially as we've just come off the back of the Facebook scandal, etc. That's what data can do, whether you want to do it or not, another question. I think the main thing there is, if you're going to do it, you need to be honest about it and don't do it behind the scenes. So that's one of the things there. Big data and analytics. So one of the main things that allows us to do nowadays, and the main thing really there is open banking. Anyone heard of open banking? Like you've heard of all these things. Open banking. The guys there's some people from NatWest in here, they must have heard of open banking. So open banking came in earlier this year. Open banking was based about opening up data from all the banks to wider usage. The idea was around fintechs, etc., just giving fintechs access to the market. What it means is you can, and given this option, you can authorise a company to have access to your bank account and look at all your transactions. You have to give them authority. So people were originally saying, oh, open banking, Daily Mail, open banking, everyone's going to be allowed to look at your banking transactions. No, they can't. What you can do though, you can authorise companies to look at your banking transactions. So for example, you could apply for a mortgage, and as part of that process, instead of saying, I will give you 6 months bank statements, you can authorise that mortgage company to look at your bank account. That could be good or bad based on your bank account. But what it does mean is they can actually look at what do you spend your money on, what was your mortgage payment account, what was your salary coming in, all that sort of stuff. And that is really a major change in financial services going forward. So, did you actually tell everyone about the credit cards you have? Did you say about the loan payments you have? Did you mention the loans mum and dad you pay every month that goes out of your account? All those sort of things can actually now come out of this what open banking include. The other thing with open banking is it allows aggregation of data for things like cross-selling of electricity, mobile phones. So you can say actually you pay £300 a month to E.ON because you know there's a better deal with N-Power, trying to think of another electricity company. Those sort of things are now ideas that are coming forward. There's fintechs out there that do that, and then some of the banks are actually now starting to think about doing that as well. Because actually this could be a real value add for our customers. To actually say to the customers, did you know you're spending X amount per month on mobile phones, BT, whatever it is? We've got to deal with whoever it is because we're a big bank and we've got 6 million customers, they will offer you this pricing. And that's purely through the use of data analytics. The other thing that's changed there is with open banking is that other people can make payments other than banks. So you can become a payment initiator. Not quite there yet with the technology, but what it will do is it will mean that you can go into your accounting package and it can initiate a payment from your bank to settle a bill. So it doesn't mean you log into your bank system. It basically just uses the links through open banking and generates the payment. Not quite there in technology. It's not been adopted fully, but that's the sort of thing open banking can do. I would always say with open banking, it's only if you authorise it. And you can't just, I can't today, so probably right on NatWest, but you can't just apply for this open banking licence, you have to be signed off by the FCA as well. So there's loads of regulations in place to do it. But the idea is to make it a much more open marketplace for financial technology. Blockchain, I said we are interested in blockchain as a bank. I saw a presentation by a guy last night in London, made my brain hurt slightly because it was about blockchain and distributed ledger technology. And he was talking about the areas that the bank is interested in. And one of the main things is how we can use it as a platform to settle transactions. Okay? At the moment, we couldn't use cryptocurrencies to settle transactions amongst banks because it's too volatile. And around 70% of all Bitcoin is owned by about 1,000 people. That's not really a very good currency to use for settling transactions. What we've done is we actually own a share in a blockchain company called R3, and we're coming up with solutions that will allow the settlement of transactions across banks and effectively across border by using blockchain and tokenized currencies, which are effectively cryptocurrencies. The main difference in that would be it's going to be in a regulated environment. That's the difference. That's where the bank gets interested. If it's a regulated environment using blockchain, that's when we're interested. In terms of definitions of blockchain, anyone want to give me a definition of blockchain? There's never any volunteers for that. Someone gave a really good example at a presentation the other week. He said, imagine that a network of computers is a big library. And when you make an entry in the blockchain, it's like going and writing with a permanent mark in one of the books in the library. It's then added to that book and that ledger forever. I thought that's quite a nice definition. I could imagine a big library and writing in a book. The final thing there is a change really for banks, and that's people chasing a dinosaur. I'm quoting NatWest as a dinosaur, but never mind. What it's done is really, the number of the fintechs coming in has really made the bank change the way it operates. And that's changing everything in terms of this summer, if you're a NatWest customer, you would have had an email from the bank saying, just to let you know, we're not going to charge you any transaction fees for foreign currency this summer. Wonder why that is. Because Monzo, Revolut, etc. don't charge any currency fees. So someone in the bank has gone, actually, we're going to lose a load of these currency transactions. Also, someone in the bank probably thought, how can we screw Monzo? Anyway, so we basically went out to all of our customers. That's a lot. That's millions of customers, and said, all this summer we're not going to charge you foreign currency fees. So all you'll pay is the rate of exchange. And I looked, because I have a Revolut account, and the rate that I got charged on my RBS account, pretty similar to the Revolut exchange rate. So it was that fee element that was stripped out, and that's purely because of that competition. That shows a couple of things. One, that it's actually affected us and making us take notice. The other thing, how easy it is for the banks to replicate those models of fintechs. So that one email, that one decision by somebody to actually say, we're just not going to charge all our customers now, that takes away a load of reasons for those people to use their Monzo account, their Revolut account, etc. Just like that. Very easy to do. The other thing as well, I don't really notice, if your banking app, so with your RBS NatWest banking app now, you can open it with your thumb, with your face if you have an iPhone X, if you're trendy enough to have an iPhone X. The other thing that's now appeared on there is something else that Monzo and those guys do. You can now freeze your card. That's a fintech thing to do. To be able to freeze your debit card if you think you've lost it. So you don't know you lost it, you just misplaced it. Rather than ringing the bank and cancelling it, and then having a new one issued and waiting a week for it, because once it's cancelled, it's cancelled. You can freeze it. That's a fintech thing, that's a Monzo thing. You can now do it on your NatWest RBS app. That's us replicating them because actually that's quite a good idea. We can get the technology to do it, we can add it in. And that's what you'll find going forward is the banks are able to basically look at the fintech, look at the trendy things they're doing and replicate it. It takes us a while to do it because we're big and we're a bit of a dinosaur, but we can do it. A couple of weeks ago we also announced current accounts can now be opened by you taking a video and a selfie. Now, don't know quite how, knowing some of our anti-money laundering and KYC colleagues, it's taken a lot of persuasion to get there, I'm sure. But fintech's been doing that for a while, so it must have been doable. The FCA must have been happy with it. We can now do that. So again, another thing, completely replicated from fintechs. It's a massive tick in the box for banks. So when I'm talking to the fintech business in our programme, I say to them a few things. You need to either improve customer journeys, make us money, or save us money. That's one of those three things. If you can do all three of those things, that is a real sweet spot. And that selfie account opening does all of those things. Improves customer journeys massively, because you can take a selfie ID, take a photo of your driving licence, done. It saves us money, because the amount of admin involved in getting copies of passports, that sort of stuff, is huge, and the staff involved in that one. And it makes us money, because the drop-off rate of people actually sending in those documents is huge. The amount of applications that aren't completed by people who start the process of opening an account is massive. So if you can make it much easier, it's going to increase it. So that really ticks all three of those boxes. A real win for the bank. So that's what it is now. So from NatWest's point of view, just a few of the things that we're doing at the moment, just want to run through. The lady on the left is a lady called Cora, and she is a AI chatbot. So you can have a conversation with Cora. She's actually worked a project that we've done with a company called Soul Machines. So Soul Machines are a New Zealand company. I think the connection's there with our chief executive, Ross McKeown, who's also a Kiwi. But Soul Machines, the guys who set that up are the guys that did the 3D face stuff for Avatar and King Kong. Again, connections with Peter Jackson. So they have originally built a thing called Baby X, which is an AI. And then they'd also built this chatbot. So you can have a conversation with Cora. It's sitting in our OX digital studio up in Gogarburn. And she will listen to you and respond to you, but also notice if you are looking confused, if you're looking cross, if you're looking happy. And she can read those emotions as well. So that is the future. We've had it set up in one of our digital branches in Liverpool for people to have a go at as well. Obviously, at the moment, doing very simple processes like, what's my balance? Can I use my card in Italy? Those sort of things. But you can have a conversation with Cora about your banking. Free agent. Anyone have a free agent accounting software? RBS made its first acquisition since the crash back in earlier this year. We acquired Free Agent, which is a fintech business, for £53 million. So first acquisition we've done for quite a while, very well received by the market. Free Agent we've partnered with for a number of years. So if you're a small business customer with NatWest, you could have Free Agent for free. So you get free accounting software. We realise this is really valuable for our customers, and also gave us a load of data analytics that we could potentially use. So we acquired them. So that's us acquiring Fintech business. Just coming on board now. And they're going to talk at our first Fintech demo day in a couple of weeks about what that journey was like from partnering with the bank to becoming acquired by the bank. I guess the shock of being suddenly owned by a major bank in Fintech. BioCatch. So that is one that's going to be completely under the radar for most people, but it's probably being used most days when you do online banking on your phone, etc. You won't know it, and you probably will never know it, but BioCatch is a biometrics company, but what they do is they look at how you operate your operating system. So when you log on to online banking, how do you move the mouse? How hard do you press the keys? How quickly do you type the password? On your phone, how do you swipe? How hard do you swipe? It can read all of that, and if someone else logs on and they're doing it differently, it'll flag it up as a potential fraud. That is a really good use of fintech. You'll never know it's happening to you, apart from it will stop frauds happening, but you'll never know. That is an Israeli company, and we're doing lots of work with Israel because they're really good at cybersecurity. Final one, ESME. So that there is that ESME Business Loans. That's actually a NatWest RBS brand. You would not know, it doesn't say NatWest RBS on there at all. So ESME is business loans, and it can provide up to £150,000 of loan funding same day. Same day decision, same day funds in your bank account. We can't do that as a bank, but ESME can, which is basically a division of the bank as a fintech. We set it up as a fintech project, its own little organisation, sitting in Rocket Space, Tech Accelerator in London. ESME loans can use data scraping, I mentioned, data analytics, reading financial information that's available in the wider space to make those lending decisions within a few hours, and also then send electronic documents, all these sort of things, and you can get the funds in your bank account, 150 grand the same day. We can't do it as a bank, ESME can do it, which is a subsidiary of the bank, from basically using a fintech model. Just a few of the different things. There's loads of other things, but that's just a few of the things that we do. So, what does that mean? Why is that important? Well, it's a couple of things really. We are good at this. As the UK, we are really good at fintech. So that's a map of the world, and it's done on a ranking of fintech hotspots. So the lower the score, the better the place to do fintech business. And you'll see there the UK and Singapore are the best locations. That's based on a number of things: regulation, skill set of staff, propensity of people to use fintech businesses, that sort of stuff. And the UK is one of the best locations in the world to do fintech business. We need to remember that, because we should always promote the things that make the UK economy grow. So that's why it's important that we understand that. And now a quick look into the future with a retro picture of someone looking into the wall. WeChat Pay. Anyone heard of WeChat Pay? WeChat Pay in China has two figures on the board there. So $337 million. That is the figure that went through Apple Pay in the US in 2017. $15.7 trillion. That's the figure that went through WeChat Pay in China in 2017. That's using mobile technology. So WeChat Pay, and you'll see there's actually a beggar with a QR code. There's a market store there with a QR code. So WeChat is a social platform in China, and what you can now do is, using a QR, so QR codes are everywhere, you can capture funds on that account, and you can pay people on that account, not via a bank, just from app to app. So if you want to pay your taxi driver, you can scan the QR code and it transfers funds over. That's real use of mobile banking, and a different way of paying altogether. Which brings us neatly on to Amazon. So Amazon obviously has a lot more adoption in the West, and one of the things that they've just started doing in India is, apparently in India people like to pay cash on delivery, which doesn't happen in the UK. When you get your Amazon, you pay online, but in India people like to pay cash on delivery, so their delivery drivers have the ability to collect cash when they do it. What you can now do is overpay. So you can basically pay more than the cost of the delivery coming in and load that onto your Amazon account. You can then use that for future Amazon deliveries. You can use it to pay for Amazon Prime or whatever else. But it's not too far away from being able to then transfer that to someone else with an Amazon account. There's not much of a difference. Once you can start loading cash onto an Amazon account, there's not much of a change needed for you to be able to transfer money to someone else with an Amazon account. And that's not that far away from the refund model. That's where it could be headed. And Amazon have been talking to JP Morgan, I think, in the US about sort of setting up a banking license, etc. They're sort of doing banking already. They're taking deposits without any banking license at all in India, etc., and using that Amazon account as a holding mechanism. So there's no bank account involved, just holding money within your Amazon account. Not too far away from being able to transfer that to other people. So final thing, and this is one of my favourite things to show because I just think it's really cool, is the use of Amazon, Fintech and retail.
4 years ago, we started the farm. What would shopping look like if you could walk into a store, grab what you want, and just go? What if we could weave the most advanced machine learning, computer vision, and AI into the very fabric of a store, so you never have to wait in line? No lines, no checkouts, no registers. Welcome to Amazon Go. Use the Amazon Go app to enter. Then put away your phone and start shopping. It's really that simple. Take whatever you like. Anything you pick up is automatically added to your virtual cart. If you change your mind about that cupcake, just put it back. Our technology will update your virtual cart automatically. So, how does it work? We use computer vision, deep learning algorithms, and sensor fusion, much like we find in self-driving cars. We call it Just Walk Out technology. Once you've got everything you want, you can just go. When you leave, our Just Walk Out technology adds up your virtual cart and charges your Amazon account. Your receipt is sent straight to the app, and you can keep going. Amazon Go. No lines, no checkout. No, seriously.
So that is not theory. That was early 2017. That store exists. Okay? I think it was incredibly expensive to put together. They've not got the technology there to roll it out across the US or across the world. It's a good example of them showing off what they can do. But you know what technology is like. It won't be long before all that technology is cheap to deploy, and they'll be able to deploy it wherever they want. That's what the future of retail can look like when you combine it with fintech. So I've talked enough. I'm going to now hand you over to a live fintech business. So Sina, where is he? Here you are. So Sina is part of our Cardiff Accelerator Hub and fintech business. They do some really exciting stuff, so I want to hand you over to Steve.
Cheers, Steve. Hello, everyone. So yeah, Steve's been talking quite a lot about fintech, blockchain, open banking, deep learning, and I just thought I'd give you quite a niche example of what's happening in the industry and actually how it all works. So at Lynq, we're working mainly with open banking and blockchain to make payments much more efficient and create kind of the new future of a payment scheme. So it's revolved around consumers, businesses and third-party providers coming together into one place. So this is the current system and how it works. Every payment you make, every card transaction in a store, every online payment you use your card number, your Apple Pay, your PayPal, it goes through the current card schemes and the payment rails. They were built 50 years ago. They're riddled with fraud, they're slow, they're inefficient, they're expensive, and they just weren't built for the internet in mind. So every payment, it takes 3 to 4 working days to settle. So when you pay for something, when you buy your coffee, It actually arrives in the business account of the business in 3 to 4 working days, and they lose on average 2 to 6% of the transaction fee. Online payments are even worse; it can be up to 15% per transaction. This is simply because the system was built such a long time ago, and there's so many different parties that have to come together to make it work. And of course, as there's different parties, everyone wants a little bit of a cut, and it becomes very expensive, it becomes very slow, and there's just all the data communication that has to go on. It just makes it, a lot of fraud can happen in the middle. So with Lynq, we use blockchain and open banking to make this much, much quicker, much more streamlined and cheaper. So as Steve was going on about blockchain, how it works, right now everyone has to trust each other. Right, everyone has different centralized servers who have to communicate with each other, and everyone kind of has to agree that everyone's being honest and truthful. And of course, this has its own issues. With blockchain, however, everyone's automatically kind of communicating in unison. Everyone knows what everyone else is doing in a secure, controlled manner, and no one can ever change anything or lie to other parties without everyone else finding out and kind of being flagged up automatically. This is why it's such an important part of what's going on right now. It's such disruptive technology. And then open banking is completely brand new. It came live, parts of it anyway, earlier this year, and then the rest of it will be towards the end of next year. And it allows much more access to bank accounts, European-wide and then soon to be worldwide. This was fought against by numerous parties who are obviously vested in the current old scheme, but unfortunately they lost. So it's much better for the consumers, for businesses, third-party providers, because innovation can come and disrupt the market and bring new technologies and actually have access to these different parties. And we're one of these companies. So with us, payments arrive immediately. When you pay for something, the business doesn't have to wait 3 to 4 working days. They get the money instantaneously, and they pay a maximum of 0.5% rather than several percent up to 15%. So it's much cheaper, it's much faster, and there's much more communication that can happen. So for instance, have you ever wondered why when you pay for something, you don't actually know what you've bought? All you know is you bought a Starbucks, but it doesn't tell you what you bought, which is how much you paid. That's just a small example of the lack of communication that happens within the current network. So we do this by connecting directly to the bank accounts, so the consumer can access all of their accounts and authorize them to access other third-party providers. The point of sale systems, these are the businesses, these are the e-commerce platforms, these are kind of all the sellers. And then the Stellar Decentralized Exchange is a mechanism that's is built entirely on a decentralized blockchain, and it allows the swift, instantaneous transacting between different currencies and cryptocurrencies. So the fees there are almost impossibly low. It's a millionth of a penny to actually do a conversion between currencies, and it's ridiculously fast as well. So we kind of connect everyone together through blockchain to make sure that all parties that are coming together are secure. So what Lynq does is it connects the consumers, the businesses, and the third-party integrators. I'll go over what the consumers can do today, as it will take a long time to go through the rest of it. But essentially, how it works is the consumer can, we've got a main application that everyone can add all of their bank accounts to. Your NatWest, your RBS, your HSBC, your Barclays. You can also add your cryptocurrencies to it, your Bitcoin, your Ethereum, your Stellars. And it's all in one application, and you can use this application to log into different service providers and give them access to your account, and you can track all of it from one place. You also get a card that comes with it, and this card has access to your entire account. So through one card, you can pay for your Barclays account, your NatWest account, your Ethereum, your Bitcoin account, and it also comes attached to all the loyalties and rewards. So you no longer need to have your gift card from Starbucks. It's all automatically ingrained into one. So when you go and use that card or the app for the 7th time at Starbucks, you'll get your free coffee without having to do anything new. So it kind of accumulates all these things together into one place, and that's basically what Fintech is all about these days. It's kind of amalgamating different sectors and making it more efficient for the consumer. So it's very, very simple. You just get sent a card. If you want to use the card, you scan it, you choose a PIN number. You can do all the cool stuff that Steve was talking about earlier. You can freeze your card, you can change your PIN number on the fly. You can have virtual cards. It's very streamlined and easy to use. The Lynq is more than just the consumer side, of course. It's more of a gateway that can be used by third parties to integrate with. The API you can see online, chain.lynq.eu, is for applications that connect to us, rather than using PayPal or Stripe, which are really bloated with fees. They're very inefficient, they're slow. So I think Stripe was 6 days to receive the money, for instance. And then there's the anchors, so these are the different payment gateways. So our network is more universal. You don't necessarily need to have any of the parts that we created. You'd be able to log into this network with your NatWest account, for instance, or your Monzo account, and connect to the new scheme that we're working on making. So we've got several patents pending, of which we've had a lot of assistance with from NatWest. NatWest is really helping us in multiple different ways in the Fintech accelerator. So they provide us with support from whether it's compliance or regulatory, security. And they also offer key access to within the bank itself, and it's individuals who have specific expertise in areas that are very useful to us. So, and obviously it's a massive bank, and they've got all their connections, all their partners. So they've actually helped us build our team and kind of get to where we are today. So if you have any questions regarding fintech, blockchain, open banking, our emails are there, and feel free to get in touch. Thank you.
I think the other thing that's really interesting to mention is that you've recently been accepted into another accelerator program.
Oh yeah, so there's by Visa.
Okay, so Visa have accepted someone into their accelerator program who basically wants to take Visa out. I think that goes along to the lines of, as a fintech business, it's sort of keep your friends close and your enemies closer. So they want to know what's going on in the fintech space, and basically brought fintech into their program that basically wants to take them out of the model.
So what I was saying earlier about these guys fighting against the new legislation, PSD2 open banking, it was mainly Visa and MasterCard. They've been battling it for the last 10 years or so, and they finally lost. And now if they don't kind of step up and play the game, they're going to be out of the game. So they've recently opened a massive $100 million fund, and they're kind of investing in open banking based solutions to kind of keep up with what's going on.
So thank you so much. There were so many whoa moments for me within that talk, and it's really close to my heart. I really care about lean service improvement, which is about reducing the time it takes to do anything. I loved your strategic significance tests around, is it going to improve the customer journey, save money or make money? It's that kind of elegant simplicity that we need to spread all through our service industries. So thanks ever so much, fantastic presentation. I'm sure we've got loads of questions. Any questions for Steve? We'll see. Oh, Kent, there we go. We wait for a microphone, thank you. Oh, is it working? Is it working? I'm not sure. Oh, there we go, brilliant.
Thank you very much. Very interesting talk. I was watching Dragon's Den the other day, and the Dragons had rejected an application not because of the product or the potential market, but because the applicants lacked enthusiasm in their presentation. Now, the hard information about the product and the market, that can go on to the computer and fintech. But the soft information about that enthusiasm, the fire in the presentation, that can't go on so easily onto a computer. Do you foresee that in the future, Cora is going to replace the relationship banker?
No. If I'm absolutely honest, it's a bit of a gimmick at the moment. It's to prove what could be done with AI, etc. It's not a real use case at the moment. What it could be used for specific things, and a really small. It's not going to replace relationship banker, because people like dealing with people a lot of the time, and business people have relationships still with other business people, and relationship managers within NatWest, relationship directors, have really good one-to-one relationships with their customers. So they're not going to do that. What the AI can do is deal with simple queries. So simple queries like balance inquiries, that sort of stuff, and that's what it can do. It's not going to. I don't think it will replace relationship management. The other thing you mentioned there about enthusiasm, etc. When we interview people for the Accelerator program, we do two things. For fintechs, I speak to them on the phone and find out technically what they're doing, but we also still interview them face to face in a hub and check things like enthusiasm, passion, is this person coachable, all those sort of things. Seen as part of that. But we check those things. So before we want to look at helping with any business, whether it's a food business, manufacturing business, or a fintech, we check those things. We check mindset, enthusiasm, that sort of stuff. And we would reject businesses onto the program for that reason.
Okay, Robert Chown. Thinking about demographics, do you think fintech is inclusive or exclusive?
There's a lot of indications that fintech can be inclusive, and there's some ways of trying to do that. There's a lot of social enterprises out there that are using fintech as a solution to reach out to people. There's a huge unbanked population out there, and there are fintech solutions now there that can provide that. But the thing is, with a lot of fintechs, you have to have mobile technology to use them in reality. But there's fintech coming onto our program, for example, that are around linking in social investors with charities, for example, that sort of stuff. It's not a straightforward answer. The whole point of open banking was it's meant to democratise sort of financial services, etc. The early things I've seen using open banking are good uses of the technology, but they're not really bringing it to anyone new. They're just making it something a bit different with existing users. So I think there's some examples where it can be used for that, but it's not widely adopted. There needs to be more social fintech entrepreneurs coming up with those ideas. Really. That was a woolly answer, sorry.
Thank you. Question over here. This is the problem with these long rows of chairs. It's quite hard to get to the middle. Pass the mic. Thank you.
Thank you. Hi, I'm Julie Thomas. I work for Cardiff University. I just wanted to ask, with fintech, from a financial crime point of view, is this yet another area where the money launderers and criminals can actually misuse the technology to launder funds? I was just thinking about what you said with regards to the Amazon app where you could overpay and then transfer funds to a third party. This is a classic sort of method used by sort of financial crime, by criminals or money launderers. Is there security within the technology to prevent this kind of thing happening?
Well, the thing about how everything's happening right now is there's also more connectivity that's going on behind the scenes. Like Steve mentioned earlier with BioCatch. There's all kinds of this. There's so much of this happening behind the scenes that you actually don't even see as a consumer. And we're talking about regulated environments here, where everyone has to be compliant, and everything goes through years of testing before it can be actually released or put into consumer usage. So there's all this AML and KYC that happens in the background.
I think for fintechs to be regulated in the UK and to deal with consumer funds, they have to go through FCA regulations. Where you've got things like Amazon, I mean, that was me taking forward what they're doing quite a distance, by the way, then that at the moment would not be regulated. I think one of the things about blockchain, to go back to that as a solution, is although it's an unregulated space, it is transparent. You can't hide what's being done, and you can look it up, and it can't be deleted. So from that point of view, you sort of think, well, cryptocurrency is great, people can fly those around all over the place. But on the other hand, also, there's a record of that on the blockchain of what's happened, where those funds have gone, which is sometimes harder to trace in the real banking world. So I understand completely what you're saying, but hopefully, as things become more regulated, and at some point, there's a big case going on in the US at the moment with their regulatory authority and Coinbase about regulation of cryptocurrencies. That might give some clarity on that by the end of the year, potentially on getting cryptocurrencies regulated, potentially. I think when that happens, then some of those areas of potential money laundering might disappear.
Thank you.
The question?
Thanks for the presentation. My name is Ahmed. I work for Cardiff. I mean, nowadays, if you buy a mobile phone, you can change your provider, you get a MAC code to keep your number. Do you think fintech can be used to keep my current account? So if I switch from Halifax to NatWest, so I don't have the hassle of calling everyone to change my number, is that something can we, see happening in the future?
It could happen, but it would take quite a fundamental change, because at the moment banks still have sort codes relating to their individual brands. So NatWest sort code starts with 5 or 6, so it's 50 or 60. Barclays is a 20 something. So to switch from one to another, it's actually a physical bank account and a change. So that would still move. But there's obviously a lot of work around digital IDs, and that would make things a lot more movable. So you could then port your history with you, I guess. But we're a long way off being able to do that. So I think it's a potentially yes, but I think we're a long way off that. While because banks tend to, there's very few occasions where we work together on solutions. Open banking promotes that a lot, and we've come up with some APIs, standard APIs for open banking, that you've got the banks sort of being forced to work together on that. But other than that, to come up with a solution for that, we're nowhere near it right now.
I've got one.
Thanks. So, I've seen the Amazon Go video. I use it a lot on some of our programs. And skipping forward, if you sort of skip to the end, I suppose, can you see, or is it already the case, where you use your biometric data to even allow entry into certain shops? So, for me, it's sad now. You go into shops like Asda's, you see lots of people getting caught on the way out. Will it be the case that we'll get into a shop where you won't be allowed in unless you've got a good credit score? Can you see that on the cards?
Well, I don't think you can go to the Amazon Go store unless you have the Amazon thing to scan your code, so that's probably the answer there. If you're going to have stores that use that technology for payment, then you're only going to be allowed in if you have the ability to settle that payment when you leave.
Yes.
So there's your answer.
And as far as you're aware, it's only Amazon that have got to that point.
They're the only ones I've seen do that.
Right, okay. Thanks. Any other questions? Well, thank you so much. It's been so interesting. I'm sure we can move on afterwards if anyone's got any questions. Your emails are there if anyone wants to follow up. And please do come to future events with us at Cardiff Business School. So thanks ever so much for a great event. Thank you, it was brilliant.